Rule 10 of the money management algorithms is the moving average of the open equity curve. Rule 1 was the closed equity curve moving average. Rule 10 is the open equity, which updates bar by bar. Rule 1 updates on a closed trade basis. Rule 10 updates bar by bar. And so let's take a look at this. It's more difficult to draw the money management algorithm and translate it across on this. So I'm going to just draw it with a strategy so you can get a feel for how this works. And so, for example, take a look at this particular strategy. We have an example strategy. It enters long here. And so the equity curve moves up and down as the market moves up and down since it's a long strategy. If a short signal, the equity curve would move down when the market moved up and up when it moved down. And so it take that into consideration as well. And so basically the red is the fast period moving average of the open equity, and we've placed it over the market because the open equity will resemble the market. So for example, when the red is above the green, it'll take the trade. So it would take the trade here, it would take the trade in here, it would take the trade in here, it would get probably a little chopped up in here. You combine it maybe with an ADX so it doesn't get caught in the chop. The ADX is the strength of the trend. We use that. And then you would trade it in here. And so that's how the money management algorithm would work. It would be over here. It would be a separate window. It would be looking at this original strategy. And it would say, okay, when the red is above the green, the L1 moving average is above the L2 moving average, then I'm going to take the trades. I'm going to get in on those trades. And so it doesn't necessarily enter and exit at all the turning points. It doesn't exit when red drops below green, but that's when it gets in on the original trade. So if your original strategy is long, it waits for the open equity to turn up based on your inputs before it actually enters that trade. Then it stays with that trade until you exit. You could customize the algorithm to exit on situations where the moving average or the open equity moving average turns down, but it doesn't exit and re-enter during the duration of that trade. It uses additional exit rules such as stop loss, profit target, time exit. And so it could be customized. The money management algorithms are open code, and so there's so much flexibility, so many things you could test. There's really an infinite number of ideas, and that's just one example of how you could customize a strategy for the open equity moving average. And so that's Rule 10 of the money management algorithms.